Hello and welcome back to Global Value. In today's video, we're going to be performing a fundamental stock analysis of IDEXX Laboratories Inc., ticker symbol IDXX. We're looking at IDEXX today because it is the number one position in the Fundsmith portfolio managed by Terry Smith, who's been referred to as the English Warren Buffett. Terry Smith uses a very simple investing framework. He buys great businesses at fair prices, and then he does nothing, meaning that he wants to hold these businesses ideally forever. Terry Smith has a number of very good investor presentations, and as he's talked about IDEXX in the past, he's really hit on the points that the business produces outstanding returns on capital, and that it has two huge secular growth trends behind it, in the fact that it is a laboratory testing company, and that its main focus is concerning pets. So at the time of recording this video, IDEXX is trading for just about $370 per share. Year to date, their stock price is down 44%. Going back 1 year, that's about the same. Over the past 5 years, they've returned 17% compounded annually. Over 10 years, that's a 23.4% compounded annual return, even including this big drawdown where their stock price is down almost half from their all-time highs last year in August. And going back 17 and a half years, all the way back till 2005, IDEXX has returned about 20.5% compounded annually, even after taking into consideration this big decrease in their share price. IDEXX is trading at about $50 over its 52-week low, which again is down more than 40% from their 52-week high. IDEXX is a large business, but they're not super large. They have nearly a $31 billion market cap. For some more background about the business, IDEXX Laboratories primarily develops, manufactures, and distributes diagnostic products, equipment, and services for pets and livestock. Its key product lines include single-use canine and feline test kits that veterinarians can employ in the office, benchtop chemistry, and hematology analyzers for test panel analysis on-site, reference lab services, and tests to detect and manage disease in livestock. The firm also offers vet practice management software and consulting services to animal hospitals. IDEXX gets about 38% of its revenue from outside the United States. The company markets its products through marketing, customer service, sales, and technical service groups, as well as through independent distributors and other resellers. IDEXX Laboratories Inc. was founded in 1983 and is headquartered in Westbrook, Maine. For our fundamental analysis today, we'll be performing a modified version of the 8-pillar analysis popularized by Everything Money, taking a look at 8 key financial metrics of the business to come to a holistic and beginning understanding of IDEXX based on those fundamentals. So let's get right into our analysis. Starting off with pillar number 1, we want their average 5-year PE to be below 22.5 as a starting point to a reasonable valuation for the business. So IDEXX is currently trading at about 44 times earnings. Over this time frame, they've never been below 37.5 times earnings, and on average, they're trading at over 63 times earnings. So that is going to be an X on pillar number 1 to start off. Pillar number 2, we're looking for their average 5-year return on capital to be above 9%. IDEXX blows this metric out of the water. Their lowest return on capital was 33.5% in 2017, which is more than 3 times that metric we're looking for, and their return on capital last year of 54% is nearly 6 times that metric, which is phenomenal for any business, but especially a company of this size. Averaged out, they're earning about 44% return on capital in a given year. That is a massive check on pillar number 2, and that's a great sign because over the course of decades, a stock is going to return approximately what its underlying business returns, and those business returns are going to be captured here by return on capital. For long-term shareholders, if IDEXX is able to sustainably earn these huge above-average returns on capital, that is going to be a very good thing going forward into the future. Pillar number 3, we're looking for 5-year revenue growth. IDEXX has increased revenues from nearly $2 billion in 2017 up to about $3.2 billion in 2021. That's another check here on pillar number 3. Pillar number 4, we're looking for 5-year net income growth. IDEXX has almost tripled their net income over this time frame from $263 million in 2017 up to about $745 million in 2021. Another check there on pillar number 4. Pillar number 5, we're looking for decreasing shares outstanding. When you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. When a business buys back stock and decreases the number of shares outstanding, they're increasing your ownership percentage of the business and increasing the percentage of the business's profits that you're going to be entitled to without you having to spend a dime. So IDEXX, even though it's a company that has been highly valued and has been steadily growing, has actually bought back a little bit of their shares. Over this time frame, they've repurchased about 3% of their shares outstanding. So not huge buybacks, and that's probably a good thing given their high valuations and nothing to write home about here. But this is better than meets the eye, especially because a business like this could be easily diluting existing shareholders. So it's a great sign to see that they're taking this in the other direction and they're slowly but surely whittling away at their share count outstanding. That's a welcome check on pillar number 5. Pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures and is this column here in green. Free cash flow is the lifeblood of any business, and a business's abilities to produce free cash flows now and until Judgment Day, discounted back by some reasonable interest rate, is ultimately what that business is going to be valued based on. Free cash flow can be used to reinvest into the business, make acquisitions, pay down debt, buy back shares, or pay out dividends. So over this time frame, IDEXX has more than doubled their free cash flows from about $299 million in 2017 up to about $636 million in 2021. That's a check here. Over this time frame, IDEXX produces about $412 million of free cash flow in a given year. Another thing to note looking at this free cash flow profile is that relative to their cash from operations and their free cash flow and their ability to grow both of those, the business does not need to invest that much in CapEx, and the business has not grown CapEx nearly at the same rate that they've grown cash flows and cash from operations. This means that IDEXX is a lighter CapEx business, and coupled with the fact that they're able to earn very high returns on capital, those are two great signs of being a truly wonderful business. So far through 6 pillars, we have 5 checks. Pillar number 7, we want IDEXX's net debt, which is long and short-term liabilities minus cash and short-term cash equivalents, to be below their average 5-year free cash flow multiplied by 5. This pillar will help us evaluate how the business utilizes leverage. We don't want to be invested in overly levered businesses because in hard times of financial distress, highly leveraged businesses are the businesses that are more likely to go under. As of the end of last year, IDEXX had just under $900 million of net debt. When we multiply their average 5-year free cash flow of $412 million times 5, that brings us to about $2 billion. So that's a check here. Over the next 5 years, if IDEXX earned what they were able to earn in an average year over the past 5 years, they'll have more than enough money to pay off this existing debt. That's a good sign that the business is utilizing reasonable amounts of leverage and that they're not having to over-lever themselves to get these high returns on capital. Another check here on pillar number 7. Finally, the big pillar of them all, pillar number 8, we want their market cap to be below their average 5-year free cash flow multiplied by 20 to give us a starting point as to a reasonable valuation for the business. So IDEXX currently has about a $31 billion market cap. When we multiply their average 5-year free cash flow of $412 million times 20, that only brings us to $8.2 billion. Now, because of the fact that IDEXX earns such high returns on capital, and because they're a relatively asset-light business, it's probably reasonable to assign a higher free cash flow multiple, especially given the fact that this business likely has decades of secular growth in front of it. However, even if we were to value IDEXX at 30 times free cash flow, that's still only going to be about $12.4 billion as to what we should be paying for the business. So pillar number 8 is going to be an X. Based on this pillar, it looks like the business is currently trading for a value that's higher than their ability to produce free cash flows. Then also to note, IDEXX does not pay out dividends, which is a good thing for shareholders, which means that they're finding ways to reinvest back into the business at these very high rate of returns. So for each dollar of retained earnings that IDEXX is keeping, they're able to produce well over $1 of value for shareholders/owners. So in summary, IDEXX Laboratories checks the box on 6 out of 8 pillars. They have very high returns on capital. They've exhibited strong growth, and they have a strong balance sheet that's not over-levered. They've had slight buybacks over this time frame, which is much better than them issuing new shares and diluting shareholders. but based on their current price, it looks like they have a lot of future growth priced in. So this type of analysis is a holistic starting point. It's not any sort of financial advice, and it's not a buy or sell recommendation of IDEXX. As mentioned, IDEXX is the top position in Terry Smith's Fundsmith portfolio. It checks the box on secular growth for growth in the number of pets that people have and growth in testing. Terry Smith has also pointed out that testing growth is going to continue growing for nearly all sorts of organisms, but especially people and pets, and that testing growth for pets is going to grow faster than testing growth for people, for the very simple fact that pets aren't able to talk and communicate what's going on with them. So if a pet is injured or sick, it's just by default going to require more tests than a person is. It's very cool to see when these super value investors lay out their thinking, and part of their thesis are built around these very simple basic facts such as this one. So while that is definitely not all of Terry Smith's thesis, it did play a role in it. And just because Terry Smith is invested in this business does not mean that you should go out and invest in the business too. You want to do your own research, learn about the business, and come to a point where you can truly understand the business both inside and out as if you owned 100% of the business. To do that, I highly recommend digging into the company's filings, dive into a recent 10K and read through their annual reports to get a better sense of the business and how management is approaching the business now and into the future. So with that said, that's it for today's fundamental stock analysis of IDEXX Laboratories Inc., ticker symbol IDXX. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Thanks for learning about IDEXX Laboratories with me, and have a great day.